Hello all, welcome back to another episode of Mastery in Commerce. Chapter 3 we were doing, and I know I'm going very slowly only because I want you to understand everything very clearly. I hope you have understood by now. My all videos contain the content only to an extent which is clear to you. I don't want to run because in school I know with the pressure of completion of syllabus and then exams and tests, then multiple activities happening, the teachers are always in a hurry to finish the syllabus. The purpose of making these videos is only to make you comfortable with the topic in a way that you understand them, not with the purpose of completing them, right? So I had explained in my previous videos about journal entries. I thought unsolved questions we were doing of accounting equation, that also parallelly we will do, but today I thought let us do one illustration which is based on journal entry, right? So this is the illustration 2 on page number 64. Illustration 2, page number 64. I am writing it over here. We are doing chapter 3 to bring you back to the memories of whatever has gone. I know it was New Year. Happy New Year to all of you. I hope this New Year you have decided that you will not leave any concept without proper practice, right? So journal entries, I told you there are 3 golden rules of journal entry. One is a real account, and real account is debit what comes in, credit what goes out. This is real account. Nominal is debit expenses and losses, credit incomes and gains, right? And personal account is, I suggest when you start doing journal entries, you write these 3 golden rules always with you somewhere as a key to understanding the concepts, right? So personal is debit the receiver, credit the giver, right? So this we will keep in one side. First of all, before starting the question, one thing which you have to keep in mind is the format. I already told you your format should be correct, and please use a ruler to draw the lines. This thin line over here is ledger folio. Here comes the debit, which is also called DR, and then here comes the credit, that is CR. These are the headings of our accounts, and we are doing the journal entries of illustration 2. Please see quickly because it is lots of transactions, but they are on the other hand very easy also. They are not difficult. First, Suraj Mart furnishes the following information. Transactions during the month of April 2017 are as under. So instead of writing 2017 again and again, what we do, we write the year over here and we start writing the transaction from 1st April. Business started with cash 1,50,000. So whenever we are starting business with cash you remember you wrote in asset side, and asset is the debit side of balance sheet. So it will be cash account debit to capital. So cash account is debited, so it was 1,50,000. And credit we write this way. Okay, this is the way to write. And over here, narration we will write. You remember narration is what? A small description of the transaction, right? So, business started with cash. right? So everybody knows whenever business is started, so it is called the capital. 1st April has more transaction. Goods purchased from Manisha. So one thing keep in mind, whenever name of any person is mentioned, it is a credit purchase or sale, right? If the name of any debtor or creditor is not mentioned, it means it is a cash transaction. So over here it is written goods purchased from Manisha. It means we have not paid her cash. We have to pay it later. So what has come to us? Debit what comes in? Goods, right? So in journal entry we don't write goods, we write purchases. So we have purchased goods, purchase account debit. From whom? Credit the giver. From whom we have taken? Manisha. Okay. So we have purchased goods on credit. So over here I have mentioned in narration why this entry is done. Goods are purchased for 36,000. Any doubt you have, you can please ask in the description box. I'll try to clear it, right? Now next is again for 1st April. Stationery purchased for cash. Stationery purchased. Now rule applies. Debit what comes in? Stationery. Right? Stationery account debit. Stationery purchase for cash. Credit what? Goes out. Cash is going out, right? I am getting what? Stationery. And what is going out? Cash. Whenever you do something, you have to spend, right? To cash account. So stationery debit what comes in, credit what goes out. For how much? To 2200.